Alrighty, welcome to the blog for Wednesday 29th of August. This is day 58 of 65 of the Compound Effect Challenge, making my way to the end. But the idea is making forward progress every day, applying my Edge method and making sure I'm doing all the little things right every single day and always be evolving. I think there's, in regards to this, there's a difference between doing the little things right each day and completely changing your structure. So I'm all about having a very systematic approach and having basically a core or a spine that you create your whole trading plan around, and that doesn't change, because what needs to happen there is you need to get consistent, you need to create fantastic habits. And I found with myself, when I really focused on, this is probably going back to the start of or mid last year, when you just kind of got a trading plan and just really focus on it and make sure you're doing all the same things day in, day out, and you sort of get a few months of that behind you, that's when you really start to get belief and confidence in what you're doing, and prepared to really take on the markets and make sure you take all your trades. From there, it's always been about evolving, improving my setups, looking at exits, a whole host of things. But the core has always remained the same. So it's very important to have a very strong core that is the foundation of what you do. But attached to that is doing, it's always evolving, always doing the little things day in, day out, and making that, the way to move forward, I suppose. So, something, for example, that I'm doing with myself at the moment, it's always about this core of, for me, it's identifying a couple of major areas in the markets and going with them. I think now for more than this year, that these basically three core areas have been with me, and that have been the areas I focused on, but they have evolved slightly. And something I'm doing at the moment is the directional breakout, so the very first directional trade of the day, looking at making it a completely separate strategy. So just making it strategy 2, and then maybe the breaking high and the breaking low trade, adding it up to strategy 1. Because really, breaking high and breaking low is just a continuation of the existing trend. That's the ones I'm looking for. It's the ones that head up to the highs and lows, have a slight pullback, and then continue and break through. So what that is, it's a part of the continuing trend strategy. So adding that to strategy 1, and then completely making the directional breakout a separate strategy within its own, and still trying to evolve and get this directional breakout to where I want it. For example, I was looking at a few things today, and I spoke about a few things yesterday. What I don't want to do, and is get too pedantic or too sort of fussy about an area. I want to keep to the strengths of what I do, and that's just really basing myself off strong support and resistance areas, or strong pivotal areas, and then using other markets to influence that or confirm those areas. That's the core of what I do. That's how I've always traded for quite for at least 12 months now. So getting too pedantic in this area here, and that's sort of something I spoke about yesterday, and then I found myself today looking at certain areas. This is not me. It's just I was looking too closely at little areas. I want to stick to major pivotal points near major support and resistance, or strong support and resistance areas. So just with that, making sure I really stick to my core and what I do. Something else that I've been spending quite a bit of time on is just also evolving the exit strategy. I've spoken about how exits need to really become a focus. And once you start reading some literature on this, you realize that any professional trader, it's sort of almost this secret society that once you get into what really makes trading work, you'll identify all these little secrets and almost areas that you just don't hear of in the normal kind of retail or hype world of trying to sell, I suppose. But when you look at what really makes it work in trading, professionals will tell you that exit strategies need to be as much a focus, if not more, than the entry focus, and that's what and also the management of a trade. So it's all about creating risk models, exit strategies, and that needs to be of far more importance than the actual entry strategy. So I don't want to get, it's important to focus on entries, no doubt about that, and you need to have something that you have confidence and belief in, suit your personality. For example, I'm evolving this first entry because I need it to be right for me and my personality. I need to feel comfortable with it, and then of course I'm going to keep on taking it. So of course that's important, no doubt about that. I don't want to take away from that. But what needs to become a focus, and as much a focus, and not get left behind, is the exits and how you get out of a trade, and spend as much time, or if not more, on that. So that's certainly something I'm spending a lot of time on. Yesterday was a really good example of how I use my exit strategy. I basically got a 3-tier exit strategy, which actually I'll do a session towards the end of this week, or probably next week, in regards to the exit strategy, and give you some ideas around that. So as far as today, just the one loss which I had here, directional breakout, found today really quite slow going. I mean, in the morning looked like it was moving around, and up until probably about lunchtime, the markets looked pretty good, but the afternoon was quite painfully slow. Probably the slowest day we've had so far this week. But you can see there's 3 key areas: 1413, 1408, 1403. You know, these are the same key areas I've been looking at for the last couple of weeks now. So obviously the market only really dealt around this 1408 for today. There was a couple of different other trading areas. This one here that I looked at didn't actually become trades, which I'll get to as well. Okay, so with this directional breakout, here's the drawing a box around the pre-market data, and just using those as support and resistance areas. So obviously when we start getting through it, using it as resistance to push lower, or if above it, using it as support to go higher. Taking the reversal concept or breaking of the pivotal points into play, that can also be used within this area, and that's what I'm starting to look at in regards to this area, but only if it's a strong pivotal point. So it needs to be something that's quite obvious. So for example, this pivotal here, it's quite obvious the market left a pivotal point here which it never came back to, but that's quite obvious as well. But what they need to be is close to my predetermined pre-market breakout box. If it's sitting up here around, for example, we made a pivot up around here, a couple of points away from this area, even if the area is obvious, it's not so much want to focus on it there. I want to attach these pivots to these areas, and what I want to do is just give myself as best chance as possible as getting on these trades without being too pedantic. So like I said, with this particular one here, quite often it comes down, comes back, it might just miss by a tick or two, or even flash on the order. I've had that happen many times, not that it happened today, but many times, and then go without me. So if you can kind of bring in another concept where there's an opportunity possibly to get in a little bit earlier, but still keep the structure and the theory of the area intact, then that's what I'm all about. So this pivotal point here, not that I approach it this way, but I'm always looking back over it, looking for ways to do it better. So I think there's a strong pivotal point here and a strong pivotal point here. So if the market, for example, came down, came back at this point like this, and you see all the other markets already breaking this area, we'll look to actually buy here rather than waiting to go through, come back and use this as support and then buy there. Because what's going to happen is most likely to get a little bit of a push if all the other markets are breaking this area. It's going to quite easily get up here anyway, most times, and I'm already in there, and I'm not relying on the market having to pull back and get me. And if worst case scenario it comes back and stops it out, well, I would have been sitting here on the limit order waiting for a trade anyway and been stopped out both ways. So it's just a as far as probability and percentages and getting the odds in your favour, to me it just makes a lot more sense to approach it that way. So the same with this pivotal area. I'm looking at this area here. And what happens if you go across and look at this particular candle on all the other markets? Let me bring up the Russell. It wasn't so obvious on the Russell, but it was certainly obvious on the Nasdaq. So you can see there the Russell. So the Russell, the Dow Jones, this same candle was sitting right at that pivot. Go across to the Nasdaq. Let me bring that up. So here's the Nasdaq. Let me draw in. Basically, this is the equivalent of pivot I'm looking at. Check this out. When here it is here. So I'm back on ES, for example. Sorry for a second. Look where the Nasdaq is. Here's the Nasdaq down here. So I'm looking at the market trying to break this point, and if you see the Nasdaq already down there, I mean that's pressure. That's certainly direction on the downside, and all the other markets are either right there, and then the Nasdaq well and truly pushing through. So that's an example of a pivot or point working quite well, and that it's going to get a push at least a couple of ticks or more through that particular area there. No doubt about that. So that's the sort of thing I'm looking at bringing in. I didn't approach it this particular way today, but that's something to add to make the area a better percentage area. So from there, I mean, entering right at the pivot there at 1, 2, 3, 5, 7, 8 ticks. So probably would have been a a break-even trade. But the way I approached it, wait for this breakout box. So here it came through, pushed through, sat here on the limit order. So it came back here, flashed on me, didn't get in there. It looked like it started going without me. So again, I thought it was just one of these ones that's going to go. Eventually did come back, enters the limit order. But by this stage now, it's obviously changed direction, ended up being a stop out. But again, it's the concept of the area worked quite well. The fact that I got stopped out in this area doesn't doesn't worry me. It's just there's certainly ways to look at doing it better. But still, this particular area was quite good. I've got the ES here, so this is the breakout box line. As I'm looking to enter it, all the markets are well and truly pushed through, and none of them had come back and broken through this breakout box. So what should happen is it should find some sort of resistance then to push off on lower if the sellers are strong. So I'm prepared to risk some ticks. Obviously it was coming back within the range, so this one didn't work, but many times we'll find resistance there. And then might start heading off for many points of direction. So with the 2-to-1 profit ratio, no doubt that there is going to work. There's some going to be right, some going to be wrong, but overall, the concept to me makes logical sense, and that's what's important with trading. So that particular one there, just a stop out. From there, we pushed up higher. A couple of areas I looked at. This is a momentum area. My version of the 5-minute fade. I love these kind of setups where it goes one direction and all of a sudden you get this real strength in the opposite direction, pushes through a key level, comes back and bounces off the key level buy here, and continue on the upside. Moving average very flat here. So when it's flat like that, it's hard to interpret price action as to whether this is just a pullback and it's going to head down and use this then as resistance to head lower, like a 5-minute sell, or whether we use it as a 5-minute fade and look for it to buy off there. So for me, price action very sideways. I put all the emphasis on the moving average 20 when it's going sideways like that for quite a while, a good 30 minutes. Just have to leave it. It's not worth the risk of having a 50-50 attempt at it. But you can see the concept or the theory of it. It's worked quite well. Bounce off that support. And, that's in hindsight, of course. And another example of one coming right where the actual 5-minute fade came up. So you can see the concept. In this particular case, the entry very, very similar, but not prepared. I mean, I was watching it live, just going. I was thinking it both ways had certainly an opportunity, so not prepared to go with it there. From there, we pushed up. So this area here, directional setup. I was really wanting this area to work. Even though price action was quite slow, and this is probably the most determining factor of staying out, but at the end of the day, I stick tight to the system and the approach, and just set my rules. And if I don't get a tick for my rules, then I don't take the trade, regardless of how fast or slow the market's going. But this directional breakout, so it's a bit like another version of the reversal. I'm looking for the market to come up, pop down, pop back up without breaking through the highs, so containing its highs and then coming back down and breaking this area here. Where the markets then try to go higher from. So without making higher highs, coming back and breaking that pivotal area, I need it to push through there, and this is where I look to sell. And it's a reversal pattern, but it's called my directional trade. Basically, it's like a very early 5-minute sell. So as the predictive average is crossing down, I'm getting it on board. It doesn't necessarily have to have already crossed, but I'm looking to sell at the actual breaking of the pivot. So obviously all those boxes are ticked. But the one final box that I need to tick from is I need all the markets right there, and at least one of them already physically breaking this pivotal point. And what happened, I'm watching the other markets, just looking for one of them just to go. But here it is here. Here's the actual candle. You can see it's just sitting a couple of ticks off the area. It wasn't until the next candle that it broke, and all the other markets looked exactly the same. Just none of them physically broken. I just find the areas that work. That's what I mean in slow price action. If this was going to work, at least one of them should break. But today, not the case. What it do? Pop down 6 ticks, pop back, and then eventually it's gone. So, in hindsight, it's eventually worked, but for me, not an issue because it just didn't meet my final criteria there. So, what's more important is stick to the rules. then the same sort of looking setups happened here as well. But I'd only take it on the first one here. But even the second one, if I was looking at entering here, again, none of the other markers were breaking this pivotal point. They all did it at the same time. No one was physically doing it beforehand. So again, no entry. So that's the day. So we're adding up here the week. I mean, this is a great thing about. It's just got to be the way that you approach it. Or for me, it's got to be the way I approach, and that's having profits at least twice as big as losses, or in most times at least 1/2 to 2 or even 3 times bigger. And this has a lot to do with your exit strategy, which I'll get, like I said, I'll do a little bit of a session or a blog on it. But for me, my personality and the way that I trade is profits always got to be bigger than losses. I just put a lot more emphasis on the expectancy of the trades, bigger winners than losers, and then if the reliability of the system starts to drop, as in more there's the percentage strike rate is not as high. I mean that's fine with me, because I'm all about making sure my profits are getting up towards at least twice as big as my losses. So, and this is a prime example this week. 2 winners, 2 break evens, 5 losses. But within these losses, rather, there's a 1 ticker, 2 ticker, 3 ticker, a 4 ticker, and a 5 ticker. So I just got all of them covered. But basically, 5 losses, 2 break even, 2 winners. So half as many winners as losses in this particular week, yet still find myself a point up. So for me, it just gives me confidence that you just don't have to be getting it right all the time. And that's when I really started to focus on risk models and expectancy and exit strategies. Now, I've spoken about this before. That just really gave me almost I don't know what to really call it, a sense of peace, or a sense of being able to relax, knowing that I don't have to get it right all the time. And even in situations where I've taken 9 trades and got 2 right, but find myself up, So that just helps me to relax a bit, knowing that it's all about what I created, as in the systems and the models, not so much about me having to be this talented trader towards picking the right areas. That's kind of the perception out there. If you base it on ego and things like that, always getting it right, that can be a hard place to trade from. But when you put some focus on the management and the exits, like I talked about at the beginning, and you're in situations like this, it's still going to work for you. And for me, it makes logical sense. Probability and the numbers are on my side, and that's what trading's got to be about. So that's a wrap up for Wednesday, and won't be back till next week. I will be trading half a day Thursday, but we'll be heading off for a couple of days, 3-4 days. So won't be able to do the blog for Thursday until I get back on basically the Monday or the Tuesday when I get back next week, and having Friday off. So have a good finish to the week. Back Thursday. Sorry, back Tuesday. See you then.